Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investment. I'm your host, Louis, and I'm excited to have you join us today. We're starting off with a story that's been making waves in the financial markets. Investors are becoming increasingly cautious, and it's not hard to see why. With debt yields at historic lows and asset classes like gold reaching all-time highs, it's clear that the market is pricing in a near-perfect scenario. But as we all know, nothing lasts forever, and there are concerns that there may be little room for the debt market to rally from here. According to S. Nareen, CIO of ICICI Prudential, AMC, India's macroeconomic story is one of the best structurally, but the markets are not cheap at this point in time. He advises investors to allocate their money across asset classes and focus on the safer parts of each class. This is a sentiment that's being echoed by many experts who are warning against taking excessive risk in the equity market. The IT sector, which has been a darling of investors in recent years, is also facing challenges. With bond yields at historic lows, there's a sense that the market may be due for a correction. But as Nareen points out, India's macroeconomic fundamentals are strong, and the country is well positioned to weather any potential storms. As we navigate these complex markets, it's essential to remain fair and balanced in our analysis. We must consider multiple perspectives and avoid getting caught up in the hype or pessimism that can often surround market trends. At the Riskwiser Zone, we're committed to providing you with accurate and unbiased information to help you make informed investment decisions. So, what does this mean for your portfolio? Should you be taking a more cautious approach, or are there still opportunities for growth in the market? We'll be exploring these questions and more in the coming segments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and risk management, where the stakes are high and the players are always on the move. Today, we're looking at a few stories that caught our attention, and I'm excited to share them with you. First, let's talk about the Reserve Bank of India's recent actions in the bond market. The RBI has been conducting open market operations to manage liquidity and stabilize yields. This move has seen strong demand, with bids worth Rs 71,194 crore, indicating a positive response from investors. But what does this mean for the broader economy? We'll be keeping an eye on how these actions impact the bond market and the overall financial landscape. In other news, the Shapoorji Pallonji Group has raised $3.3 billion through a high-yield bond issue with a whopping 19.75% annual yield paid at maturity. This deal was structured by Deutsche Bank and saw participation from several major investors, including Ares, Farallon, and Cerberus Capital Management. The group's 9.2% stake in Tata Sons, held via Sterling Investment, was used as collateral for the loan. But, with such a high borrowing cost, what are the implications for the group's financial health? And how will this impact their ability to service their debt? We're also seeing some interesting developments in the real estate sector, with the SP Group aiming to monetize its real estate unit within 24 months, targeting around 13,000 crore. Meanwhile, their oil and gas business, SP Energy, could be worth around $800 million. But, with so many moving parts, it's essential to consider the potential risks and challenges associated with these plans. As we navigate these complex financial stories, it's crucial to remain objective and consider multiple perspectives. We'll continue to monitor these developments and provide you with timely updates and analysis. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a look at the latest developments in the U.S. economy. As we've been discussing throughout this episode, trade policy and tariffs have been major factors influencing market trends. Recent data from the University of Michigan suggests that consumer sentiment has taken a hit due to uncertainty surrounding trade policy. The survey found that nearly 3/4 of consumers mentioned tariffs as a concern, with many anticipating higher prices in the near future. This is reflected in the 12-month inflation expectation, which soared to 7.3%, the highest level since November 1981. Now, it's essential to consider multiple perspectives on this issue. On one hand, some argue that tariffs are necessary to protect domestic industries and create jobs. On the other hand, others claim that these policies will lead to higher prices, reduced consumer spending, and decreased economic growth. The Federal Reserve is also keeping a close eye on inflation expectations as they weigh their next monetary policy move. With long-run inflation expectations increasing to 4.6%, the highest level since March 1991, it's clear that the Fed has a challenging task ahead. As investors, it's crucial to stay informed about these developments and consider how they might impact your portfolio. We recommend keeping a balanced approach, diversifying your investments, and being prepared for potential market fluctuations. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.